Hello again, everyone. In this technical analysis of the stock market video, I call it crash mode because that's exactly what this market looks and feels like. It is in crash mode. It is very, very strong moves and dramatic moves to the downside. Everybody's been talking about, you've heard all the folks on TV talking about the fact that it was the fastest 10% drop from the all-time highs to correction mode, quote unquote correction mode. Everybody likes to say 10%. Fastest ever, and the fastest move to 20% down from all-time highs ever. Okay, so that's some pretty dramatic movement, and we're going to dive in and take a look at this. On Friday, it was up 1,985 points. We're going to focus on the Dow Industrials, and I'm going to compare what's going on here to what happened in 1929. We're going to take a look at that. So, big move to the upside on Friday. When did that happen? Let's take a look at the 30-minute chart. It all happened in the last 30 minutes of the day when the press conference was going on. And it now looked like maybe the U.S. government was getting its act together, working with industry, talking about having some testing centers, talking about possibly having drive-through testing centers and using Walmart parking lots, etc. And the market just took off like a rocket. Well, you know, this market has jumped like that many other times, and at the very end of the day, here's the last 30 minutes right here on this spike. Here's the last hour and a half spike in here. Okay, and then we, ended up selling down. So make sure I've got that right. Yeah, that is. That's the last hour and a half of the day. So we'll see what happens starting on Monday, starting Sunday night when the futures start trading at 5 o'clock Central Time. So what's happened with the Dow here? On Thursday, it closed below this dashed line. What is this dashed line? The dashed line is the December 2018 really vicious sell-off that occurred, okay? So why am I, everybody wants to call 20% down a bear market. And I know I talked about it when I talked about some videos back here. We looked to see what indices were down 20%. Some were. The S&P never actually got there. It got really, really close. And so now that the S&P, and I know we're looking at the Dow, but when the S&P got down 20%, everybody's like, okay, we're in a bear market. Well, here's what I'm waiting on. You notice this move back here? It was a 3-wave move. Okay, we never got 5 waves to the downside. Okay, I am not going to officially say that we're in bear mode until I see 5 waves down. So far, we've seen 1, 2, and we're in the midst of 3. I'm not sure that the 3rd wave is done yet. Okay, so that's what we're looking at. Let's take a look at first of all, let me show you the weekly view. Okay, so here's the weekly view. So down 2,679 points for the week. You can see how we came back, and a lot of that was, again, that last 30 minutes of the day on Friday. And that's what really kind of made this look and brought it back about halfway on the weekly range. Okay, so that's the picture. That's what we're looking at. This is the break of that December 2018 low. So now let's dive in and take a look at some of the Elliott Wave counts. And then I'm going to look at and make a comparison to 1929. So here's what I think's going on. Now, this view here is the least bearish view. Okay, this view here is showing most of wave 3 possibly completed. And so in the wave 3, this 3rd wave is always an impulse wave like this, okay? Especially when I'm in an impulse count. I'm not doing any kind of leading diagonal or ending diagonals or anything like that. I'm in a 5-wave move. And so what I looked at, I said, okay, where are we? Let's take a look at the 65-minute chart, which is what I use as my hourly chart because it divides the day into 6 equal bars in terms of the trading in the United States here. Okay, so here's what I think is going on from a less bearish view. This says that we are doing 1, 2, 3, and this was a 4. Here's where this count goes wrong. If we could continue to push up a little bit more and we overlap wave 1, then this count is invalid. Then what's happening is there's no way that this 3rd wave is complete. and that we're evolving into a much more bearish count and a deeper correction to the downside. Okay, I'm not going to go into that detail right now in this video. What I want to do is compare what's happened so far in 2020 to what happened in 1929, the crash that basically set the stage and started the whole Great Depression. So look at this move here. This move from the all-time high on February 12th to the low on Thursday was down 28.4% in 20 trading days. Okay, so let's take a look at 1929. So what I did, because this is the same software I'm using, I just took a snapshot to show the picture, okay, because I wanted to easily go back and forth. So here's the all-time high in 1929 on September 3rd, 386.10. Here's the low of the crash low that occurred actually on November 13th. Here's where they always talk about the crash, you know, the Black Tuesday. This is what happened here. So what I'm trying to look at is say, okay, well, where was the movement in 1929 about equal to the movement we just experienced this last week? Well, here's down 29.5% at the low on October 24th. And notice how it came back. I think that's really interesting how it came back, rallied back, and then we had this next pause type day in here. And then we had a pretty strong break. This was the crash break, Monday, Tuesday. Okay. Then we got a pretty big bounce back up. But the key thing, we got 5 waves. 1, 2, 3, 4, 5. Then we got this counter trend rally that occurred and rallied from November back into April. And here's the high that occurred, about a 50% retracement. Actually, I think I got the number. Yeah, 53%, 53.4% retracement back into April. And then that was it. And then it just chopped lower for the next 2 years steadily until July 1932. So here's the interesting thing. Look at this, down 29.5%. And what's amazing about this is this took 37 days for that to happen. Okay, 37 days to drop 29.5%. Now we go back over here, we're down 28.4%. We're only 1% difference in the move. We've had 3 waves. We think we're still in the middle of the third wave. It isn't done. Just like back here, we were in the middle of the third wave. It wasn't done. Okay. And we did it in 20 days, not in 37 days. So that's what we're talking about in terms of the breadth and depth of this market in terms of being so strong and yet accomplishing about the same thing. We did in 20 days what the 1929 crash took 37 days to do in terms of trading days. So it's going to be really, really interesting. The entire move down here, which ended up dropping 50.6%. Let's see if I got my math right. Yes, 50.6%. It took 49 trading days. So that was another 12 days before we actually bottomed back here in November 1929. So it's going to be real interesting to see how this flushes out over the next couple of weeks. Do we continue to bounce? Are we truly going to get 5 waves in here? That's what I'm looking for. We're looking for 5 waves down. And that's going to tell us that the major direction of this market is down. Will we get a counter trend? Yes. Yeah, I mean, we're getting bounces already in here. They're not holding. And where's the Fed? The Federal Reserve is meeting this coming week, okay? They're holding their March meeting. Right here on this day is when the Fed had an emergency rate cut, the first since December 2008, and they cut it 0.5 point. The market didn't care. It rallied the next day, but that was it. It kept coming back down. So now what's baked into the futures on the interest rate? The market is now expecting the Fed to cut it 1% to 0. That's what they're saying. That's what the market's expecting right now. So we'll see what happens this week. The Fed meets on Tuesday and Wednesday. The announcement will come Wednesday afternoon unless they do some kind of early special announcement, but that's the expectation. Okay, that's it for this video. A lot going on. We'll see what happens. We'll see what kind of continuation we get. I don't think this is done, and we'll see how it plays out here over the next few days and next few weeks. All right, everyone, if you felt like the video was helpful, hit the thumbs up. And if you're not a subscriber, hit that subscriber button. And if you'd like more of this kind of information, head on over to my website. Check it out, joehenches.net, and check out what we've got over there in the membership. All right, everyone, have a great week, rest of the weekend, and a great week.